Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Tuesday, March 4th, 2008. The top 30 largest U.S. hedge funds gravitated more aggressively to technology, healthcare, and financial sectors last quarter, according to Thomson Proprietary Research. Basing its findings on filings with the SEC, TPR found that for some of these HFs, it was their first foray into these sectors, while others increased their exposure. TPR suggests, however, that rising and aggressive interest, especially in technology, healthcare, and to a slightly less degree financial services, may indicate the hedgies are playing the volatility, as this trio is also among the top 10 decreases and sellouts in the quarter, according to Thomson Investment Management News. TPR says in the alternative, says TBR, the moves may mean these large firms are switching from momentum stocks to value stocks, with a notable lack of movement in consumer staples. Staying with today's hedge fund headlines, a North Carolina government pension fund's move into alternatives has been a costly one. According to the Charlotte Observer, the $77 billion NC Retired Governmental Employees Association saw fees to outside investment firms rise 35% to $212.5 million as of last June 30th. That figure includes a 60% increase in alternative investment fees to $73.7 million. That is with just 3% of pension schemes' total assets in alts. State Senator David Hoyle told the paper, quote, "The state head treasurer Richard Moore introduced alternative investments to the pension fund with the idea that we'll see higher returns. If there are higher fees and a higher return, that's no problem. Perhaps not, except for the fact that the scheme's alt portfolio returned 13.7% last year, compared with 19.9% for stocks and 15.9% for real estate." And how's this for a help wanted ad? Wanted investment managers to handle hedge fund and private equity investments for China's $200 billion sovereign wealth fund. According to the International Herald Tribune, the China Investment Corp is in the process of bringing on board foreign fund managers to invest in hedge funds and private equity funds. The hiring spree should come as no surprise, as the CIC recently announced it would invest some $4 billion into private equity fund run by Christopher Flowers after acquiring a chunk of the Blackstone Group last year for $3 billion. The latter investment has come under a lot of criticism because of its poor performance, which explains why CIC is looking for a foreign fund manager that has the expertise the locals may lack. And in other news, anything that smells of regulation seems to scare off hedge funds. Americ Lachier of fund advisor Carnegie Global Financial Services Group told Thomson Investment Management News that while the cost of adopting the UCITS 3 operation structure is costly compared with traditional and institutional funds, even big hedge funds are avoiding it and prefer to keep their Cayman Island management structure. Despite the fact that hedge funds may have been slow to move into the project, which is designed to allow marketing of investment funds throughout the European Union, as long as the funds and its managers are re-registered in a member state, he says it is something that should definitely reshape the industry going forward. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge funds channel online and read the latest developments.